Welcome to Business Talks. I'm Kent Adams, your host. I'm excited today to have in our part one of two-part series, Don Morgan and some of his team here from Independent Wealth Connections to talk about where we've been, where the market's been the last 100 years or so. And in part two, we'll talk about where we're going. And hopefully with the crystal ball, and he brought one.
Absolutely.
We'll talk about some of that. And first, before we go to a little setup video that you provided, let's introduce our panel here. And Charlie?
Yes, hi, Ken. Charlie Carr. And I'm very excited to be here. About 6 years in the industry now, and have a.
So you're kind of a newbie.
I'm the newbie of the group here.
You're bringing youth to the old guys, right?
You know,
you have to be
in a
careful
way,
how you answer that with them sitting here.
We'll have to take that offline.
Okay. It's funny how we say those things these days, don't we? Okay. And we have.
My name is Dick Branch, and
Yes.
I'm a senior vice president with Independent Wealth Connections, and also a certified financial planner. And
okay.
I'm brand new in the business too. This is my 37th year.
Oh, you're the next kid, huh?
That's right.
Oh, wow. Okay. Well, what I like about this.
I'm what he wants to be when he grows up.
Yeah.
Pretty much.
Another 30 years, 31 years, right?
Right.
And I know who this guy is, Don Morgan.
And I've been in finance since 1978 on what I call the white hat side, this side helping people make good decisions since 1995. Charlie didn't mention, but he's a chartered retirement planning consultant.
Okay.
So he's got the academic qualifications to really help people make good decisions, as Dick does. The fundamentals of the first part of this are really history, and history is easy because we know what happened.
Right.
But I want people to put themselves in the shoes of the people that were living through it at the time who didn't know what was going to happen.
And that's a really different perspective because we live in that for now or looking forward, don't we?
We do, and we tend to think about the past as being, the golden age.
Yes.
And the present is terrible,
Yeah.
and the future is awful. It's
Right.
even worse than terrible.
Right. How
And
will our kids survive?
the video that Kevin's going to play for us
Right.
is one of the most powerful videos I've seen in a long time. And in 4 minutes, it does what I used to do in 4 hours.
Okay.
And that's to explain how we got here. So why don't we roll that video and take a look at it?
Let's do that.
Visualization is right at the heart of my own work too. I teach global health. And I know having the data is not enough. I have to show it in ways people both enjoy and understand. Now, I'm going to try something I've never done before. Animating the data in real space, with a bit of technical assistance from the crew.
So, here we go. First, an axis for health. Life expectancy, from 25 years to 75 years. And down here, an axis for wealth, income per person, $400,000, $4,000, and $40,000. So down here is poor and sick, and up here is rich and healthy. Now, I'm going to show you the world 200 years ago, in 1810. Here come all the countries. Europe brown, Asia red, Middle East green, Africa south of Sahara blue, and the Americas yellow. And the size of the country bubbles show the size of the population. And in 1810, it was pretty crowded down there, wasn't it? All countries were sick and poor. Life expectancy were below 40 in all countries. And only UK and the Netherlands were slightly better off, but not much. And now, why start the world? The Industrial Revolution makes countries in Europe and elsewhere move away from the rest. But the colonized countries in Asia and Africa, they are stuck down there. And eventually, the Western countries get healthier and healthier. And now we slow down to show the impact of the First World War and the Spanish flu epidemic. What a catastrophe! And now I speed up through the 1920s and the 1930s. And in spite of the Great Depression, Western countries forge on towards greater wealth and health. Japan and some others try to follow, but most countries stay down here. Now, after the tragedies of the Second World War, we stop a bit to look at the world in 1948. 1948 was a great year. The war was over, Sweden topped the medal table at the Winter Olympics, and I was born. But the differences between the countries of the world was wider than ever. United States was in the front, Japan was catching up. Brazil was way behind, Iran was getting a little richer from oil, but still had short lives. And the Asian giants, China, India, Pakistan, Bangladesh and Indonesia, they were still poor and sick down here. But look what is about to happen. Here we go again. In my lifetime, former colonies gained independence, and then finally they started to get healthier and healthier and healthier. And in the 1970s, then countries in Asia and Latin America started to catch up with the Western countries. They became the emerging economies. Some in Africa follows. Some Africans were stuck in civil war and others hit by HIV. And now we can see the world today in the most up-to-date statistics. Most people today live in the middle, but there are huge differences at the same time between the best of countries and the worst of countries. And there are also huge inequalities within countries. These bubbles show country averages, but I can split them. Take China, I can split it into provinces. There goes Shanghai. It has the same wealth and health as Italy today. And there is the poor inland province Guizhou. It is like Pakistan. And if I split it further, the rural parts are like Ghana in Africa.
And yet, despite the enormous disparities today, we have seen 200 years of remarkable progress. That huge historical gap between the West and the rest is now closing. We have become an entirely new converging world. And I see a clear trend into the future. With aid, trade, green technology and peace, it's fully possible that everyone can make it to the healthy, wealthy corner.
Well, what you just seen in the last few minutes is a story of 200 countries shown over 200 years and beyond. It involved plotting of 120,000 numbers. Pretty neat, huh?
Wow, 200 countries in 200 years. That really does graphically show what we're going to talk about.
Absolutely.
And break it out. And I don't know about you, but things like that really help me see the picture.
Yeah.
You know, and even though his tone and the language is a little hard, but it really did show where things have come in the last couple hundred years.
And remember, he ended in 2009 in the midst of the last big, giant, Great Recession.
Right.
And it was still a great time to be alive.
Yeah. And people still did live past 10 and 20 years of age and all that. So what does that tell us, gentlemen? What have we learned from looking back?
Well, what's interesting to me in watching a video like that, which helps illustrate the incredible growth that we've been on since the beginning of our humanity, and yet we have this tendency to awfulize things as humans.
Yes.
And which is normal, and we understand that, but the reality is oftentimes different than the perception of the day. And I think that's an important learning and something that really is the basis for what we want to talk about today.
Yeah.
Well, and there are different themes that come about, and one of them is the global theme there. It wasn't just that the U.S. is wealthier, but the poorest
So many
countries are
countries,
wealthier.
right.
Even the poorest. And when I was in school back, as my daughter would say, when dinosaurs roamed the earth,
Right. You walked uphill twice. Well,
7 miles
Yes.
both ways,
right.
uphill in the snow.
Yeah.
Yeah,
We
barefoot.
had similar histories.
He read about it.
The UN issued a report on global poverty, and at
Okay.
the time that I was in school, and remember UNICEF would go around on
Yes.
Halloween and collect money for the starving children in the third world, and we all gave because we cared. It was over half of humanity went to bed starving and woke up starving.
Right.
Today, that number's at about 10%.
Wow.
There is a growth in the poorest continent, Africa, that is hard to quantify. Cement's being poured all over the continent, cement in the form of roads and sewage plants and
Right.
airports and ports for ships. And there's this consumer-driven middle class that's occurring not just in the U.S., but globally.
Right.
And what that means, we think, because we're now going to shift from the past to the future for a second, is that the economic growth of the world will continue at a pretty high rate for the foreseeable future. Not without headwinds, not without issues.
Sure.
But it's instructive, I think, to go back. So the video started in 1809. In 1792, the first merchants who would become the New York Stock Exchange started breaking stock on the what is now known as Wall Street.
Right.
And they began the process of what we now call capital formation. It's part of the secret of why Dick talked about human history, but from the beginning of this country, 1776 until now, there's been a hockey stick of growth.
Yes.
Part of it was we took in the United States the English common law and applied it to our new culture and said we want to let companies grow. We wanted capital to grow. And if that sounds like I'm an unabashed advocate of the free market, I am.
Mm-hmm.
It works, and it works.
But Don, I think it's important to just add a little point to that is because the viewers could end up with the idea that maybe this all started with the advent of our country and the New York Stock Exchange. And yet, in recorded history, we can go all the way back to the Dutch in the early 1600s and stock exchanges and the trading of stocks. And history even talks about, or writings talking about what the Mesopotamians were doing in trading bond-like instruments. So this is really since the beginning of man and the desire to trade stocks and securities, et cetera.
But we've created a free market that has no parallel in human history, with billions of people literally participating in the capital markets, billions of people with credit cards, billions of people who get on airplanes and fly places.
Right.
Until this last century, there weren't billions of people.
You know, and one of the things that I've seen in the last couple of years in doing some of these interviews are that there are some local folks here in the Spokane area, as I'm sure there are across the country, who have taken some funds and gone to the African countries and so forth to help, especially women who are often left to run the family there, to start up small businesses and that sort of thing. What a great opportunity and a move toward that rising economy that we saw in the graphic.
And 500 years ago, that was hard to do.
Yeah.
100 years ago, that was hard to do. It happened.
Right.
But
rarely.
You know, and that growth that Hans talked about in that video didn't happen in a straight line or without awful things.
Right.
You had the Civil War, massive carnage. You had the Napoleonic Wars in Europe. He showed the impact of the Great Depression.
Showed the impact of the Spanish flu.
The Spanish influenza,
Yes.
absolutely.
Yes.
So all of these things happen, and they are awful.
Yeah.
And then we recover from it.
But it didn't crash the system. And I think we were talking before we started this recording about events and so forth, and that we live through events.
Right.
And even 9/11 and what it did to the stock market. And I mean, all of us can think back to the 9/11 and we have the negative thoughts of what happened and the people killed and it started a war and everything else that goes with it. Well, what happened to the market?
Well, the first thing that happened was for 3 days, really 4 days, because the September 11th was a Tuesday.
Right.
The market opened briefly and then closed.
Right.
And it stayed closed until the following Monday.
Right.
The bigger firms were ready to open on Thursday, but not every firm was.
Right.
And when it opened on Monday, the market dropped, I don't remember now, 500 or 600 points, and then it dropped 500 or 600 points, and then it dropped 500 or 600 points every day.
Right.
And we thought that was the beginning of the end again.
Yeah.
We
A
meaning the
series of
population.
those. Right.
Everybody.
I mean, all of us.
All of
Right,
us.
Yeah.
And yet, 30 days later, the markets were higher than they were
Before
on September 10th.
Wow.
Right.
Well, for me, I wasn't in the financial industry at that time, but I certainly remember paying attention to what was going on in the market because
you'd hear it every night on the news.
You'd hear it every night in the news.
Right.
So yeah, I believe that event was scary for everybody, but to your point to where you're going about how it was an event where recovery happened. It's time and time again we see that.
And there's another theme buried in there that I'd like to touch on that we'll talk a lot about in the second show, which is that part of the reason the markets recovered as well as they did, because this was a gigantic hole in New York's physical fabric.
Right.
Literally ripped the telecommunication systems apart, destroyed three
It
massive...
was more than just the emotional
Oh, no.
lives. It was electronics and everything else that were greatly impacted.
Well, and in the heart of the financial district
Yes.
and in New York City, which is such a huge financial hub for the world,
world.
It had the potential to be even worse than it ended up being, as
Yes.
bad as it actually was.
Right.
And the part of the reason why we recovered as an industry so rapidly, and I was in awe of this, was the emergency preparedness that everyone went through for the event that did not happen the year before, which was Y2K.
Yes.
And so
yes.
all of the big firms had backup structures that were in place and tested. They had redundant systems in place and tested. Literally, it was because of the Y2K preparedness.
You know, I hadn't thought about that.
Oh, but I was there, and
Yeah.
planning matters, even when you can't plan for. How do you plan for 9/11?
You don't.
You don't, but it happens, and therefore you have to plan for what if something we can't think of happens.
Right. Right.
And our industry, which is not perfect by any means, is really good at planning, and not without kicking and screaming, but they prepared for Y2K properly, and with less than 7 days, they were back up and running. And as Dick pointed out, a month later, the markets are recovered. It took 90 days later before the airlines had started to recover.
Right. Right.
So, and to this day, we're still paying the price for what happened.
yes.
Everyone that stands in line at the airport
Yes.
is paying a price for that.
But I think part of what history continues to hide from us a little bit is we have this tendency to awfulize. So in the course of the event happening, our tendency is to think, oh my goodness, it's the end of the world and it's going to get worse.
Right.
And the reality, if you think about some of the incredible tragedies in our lifetimes and even in our history, but you can go to into the world wars where, I mean, millions of people died,
Yeah.
and yet we ended up, in some respects, a better world as a result, not because of the war, but
Right.
because of the planning and the things that happened after that.
Well, the
And-
airline industry and so many
Sure.
things that were able
The
to
space program.
to jump off of
Well-
the what was done for the war. I mean,
Yep.
Yeah, it really is amazing. You know, when you look back on the 20th century and the 19th century, it was not only a century of growth, it was also 2 centuries when we shifted from manpower and animal power, from, in some cases, slavery, to machinery.
right.
And really one of the fundamental stories is the story of oil. And we'll talk a little more about oil when we come back, but oil is one of those things that nobody really understands. You think after 200 years of oil we'd understand it. Geologists are still debating. Is it prehistoric microorganisms and animals? Is it an exhalation of the earth? We don't know. And yet it drives everything we do. Think about it. Dick talked about the oil crisis, right?
Right, right.
And we were reminiscing before
Oh,
the
yes.
show. You got to live in a town where on
Yeah.
even number days you could have gas.
Exactly, exactly. And I remember, and I love telling my grandkids and even my kids that I remember early marriage and been married for 49 years. So this does go back a bit, paying 29 cents a gallon. You know, and I think it's a little more than that today.
I think the tax on it's
Yeah.
more than that.
More than 29 cents.
I think you're right there, and let's not get started, right? Right.
In fact, I think it went up again this weekend.
Oh, I think you're right with the July 1st.
July 1st,
Yes,
yeah. Yeah, yeah.
another few pennies, but yeah. Let's talk about. We have about 5-6 minutes left, and let's talk about where things are coming. And I'm thinking we talked about the events, and we had an event not very long ago. In fact, really just days, and for some folks, just a couple of weeks ago, as they watch or listen to the podcast, with Brexit and how the world was going to fall apart. And yet, how are things going?
You know, what's
I mean, this is as current as can be.
one of the things that the British have done, which is just nothing short of brilliant, is they just announced they're going to cut corporate income tax rates. How smart is that? So it's a geopolitical event. It's a big deal.
Right?
But it doesn't change what people do on a daily basis. They get up, they go to work, they buy cars, they eat their meals, they turn on their TV or their laptop, or they go to the movies, they go to the pub. It's an event. It made headlines.
Yes.
I'm not sure how big a deal it is. It's a big deal in some ways.
Right.
Dick, what do you think?
Well, I agree. I think that once again, it's an event. And what we typically see when events happen, depending upon how it impacts the globe or individual countries, we'll see a significant impact in the markets. But we see almost an immediate recovery from that, and it happens time and time again every time there's an event. What really has a tendency to impact the markets per se longer term are those things that are truly economical, and it deals with recession and the business cycle and corporate profits. In reality, one of the greater events actually starts July 11th. Alcoa is the first company to present earnings, and that starts then the second quarter earnings season. And there's a couple things that will happen. It will be, number one, it will be the actual performance against the numbers and what analysts' expectations are.
Sure.
But what might be more important, given what's happened with Brexit, is what happens with the forecast the CEOs and CFOs give us about the future earnings of those companies.
Okay.
That will have a profound impact on the value of stocks and then the overall market as a result of that. So the Brexit as an event isn't as important as Brexit as it continues to unfold and its economic impacts that will then ultimately impact profits, because at the end of the day, profits are what matters.
Right. Right.
A mentor of mine once said that the market in the short run is a voting machine. How do I feel today?
Yes.
In the long run, it's a weighing machine. How much is this worth?
Yes.
And it's the long run that really matters.
Yeah.
It's hard to focus on the long run when you've got a 24/7 news cycle and people are yelling
That has
in your
really
ear.
changed things, hasn't it?
Dramatically.
Because I remember back, I'm sure you do too, when the nightly news was 15 minutes. And
Right.
then they went to a whole half hour. I mean, that was a big thing. And now we have 24/7 news cycle.
Hundreds of channels of news.
Yes, and all kinds of, not just on TV and cable and so forth, but on all of our electronic devices and phones and everything else. You're probably more used to that than the rest of us.
A little bit. What I wanted to say is that, one of the things that I heard that came from the Brexit vote is it just rekindled the fires again. I'm a native Texan.
Okay.
And so
Sorry.
it brought up the Texit talks again. And so
Yes.
I can remember from day one of being a native Texan how Texas always said they're going to leave the Union. So I just wanted to throw that in, being a native Texan.
Okay. So how are you on that? They might be worth it sometimes.
Sometimes it might be worth it.
Well, on that note, we're going to wrap up our first session, which is really kind of bringing things from the early 1800s, literally, to 2016,
Right.
as we are right now. Any last closing comment? Because part two is going to be, where are we going? Which is why you have the crystal ball here today.
Oh,
right?
yeah.
Yeah. Okay. And it has all the answers, right?
It does.
Okay. All right. Can I take it home when I go?
You got to talk to my wife about that.
And we have more answers for the second show.
Oh! So we'll hold this for some time, the second show, and then have you back in a year and see how
if we
many,
were right.
right? We'll
Right.
take point by point by point.
Absolutely.
And isn't that done? I mean, it's kind of what we've been talking about,
Right.
this panic, this event.
Well, I've heard Don, call it several times FUD, fear, uncertainty, and doubt.
Yes.
So
Good point.
one of the items that we all talk about in the second is
Our
how you can
friend FUD.
handle our friend FUD.
Yes.
Okay. Well, we're coming back with Charlie and Dick and Don to talk about FUD in part two.
Fun with FUD.
Fun with FUD. We'll be back.
I'm Barbara Mueller.
And I'm Marty Mueller. We have gotten some amazing opportunities to design and build IMAX cameras that were going to go on the space station. We came up with a mechanism that we poured a year into, and we had to start over. The failure resulted in a camera that we got an Academy Award for.
The first shot, when you see Earth from our camera, there is no other moment like it.
Wouldn't have happened without that failure.
So how do you give a kid or even an adult the skills to go forward? The only alternative is to teach them to think, to teach them to explore, take risks, and know that they're going to fall, and they're going to fall on their next great idea.
Gizmo's a makerspace, which is a community laboratory for education and fun.
The cooperation amongst people is the most important thing that we have. And STCU is doing that, and I hope that we're doing that too.
STCU.
Here for good.
Generating electricity is a complex process, but when you think about it, what we do is pretty simple. We turn water into ideas, natural gas into a helping hand, wind into lifelong memories. We provide energy for life.